Good afternoon. It's 5 o'clock, just made it. Technically, I was talking before it turned 5:01. Good afternoon, everybody. Sound check, how's the sound? Everybody give a nice good afternoon, hello. This is Paul. If you are new, I'll give a couple of introductory comments real quick and a couple of quick things, and then we'll get started with today's presentation. I always like to end these in an hour on the hour, so we're typically done by 6. If you are new, these Wednesday events, we call them DTS special events. They are open to all DTS members, and they're also recorded and on the website. There is a spot on the website called the DTS Free Stuff page. You can go there, and if you haven't been there, I call it the best source anywhere on the internet for free information about trading. Right now you can spend an entire week there. If you're confused when you go there, start off on the little section called the Hall of Fame, just kind of some of the favorites as they were voted on by members at DTS. Also, the whole site is mirrored at YouTube as well, too. So there's a DTS YouTube page you can go to. If you go to YouTube, you can sign up there and you will get a notification anytime a new video is posted. So some people like to do that. And then, of course, you can come back and view it if you want to on the DTS site or on YouTube, whatever you want. Tonight is called How Much of Trading is Psychological. And I'll warn you ahead of time, I never like to overpromise. For some of you, this will be a boring presentation. The last several I've done are all about charts and about different fun things and trades and all kinds of good stuff. And you can go look those up on the free stuff page now that you have it if you want to. But tonight is a topic that some people find boring. Do them because in many cases the people find them boring, or sometimes the people who maybe need it the most. But this is about psychology and how it can affect you, and a little discussion about how much of trading in general actually is psychological. Yeah, I had 2 days this week. You know, it's been a good month day trading wise. The long-term positions are doing great. Day trading been a very good month, but this week I've had 2 days now where I'm actually down a little bit for the week. 2 days where I just thought things were great. Everything was fine. And lo and behold, stuff just didn't work. It was kind of weird, especially today. Boy, I thought I was set today. I thought I had some good stuff. And, you know, a couple of things hit targets and 2 things stopped and, you know, didn't get big targets and, you know, ended up with a small loss, whatever. And it made me think, if I'm doing this presentation, how tough it is if you're new. Because you may say to me, well, what are you going to do about that? My answer is, well, nothing, because nothing changes in trading, actually. There's just some days that's what happens, and it's not going to change what I do. And when you understand and you learn how to trade, there is no such thing about like changing your strategies. I don't even understand what that means in a sense. Because when you learn how to trade, you learn the chart, you learn the language, and I guess there's things that may adjust naturally as market environments change, but you never have to learn anything new. So there's absolutely nothing that happens other than you go back out tomorrow and the odds will say I'm going to have a great day tomorrow. So it's interesting though, when you're new, it's hard to get that, and that's part of what psychology is all about. So let's get going with it right now. This was sent to you. You can read it if you want to. If you did read already, great. Just the blah, blah, blah. You know what's going on here today. A couple of introductories. This is kind of a eclectic combination of slides trying to make some different points and hopefully open eyes to possible issues. It's funny, in the classes I teach, sometimes, especially in the second class, there are little blurbs I put and discuss, and they're just little sentences. They're just things to think about. And it's amazing how many times somebody will come back to me and you say, you know what, the whole class is great that it took, but you know, 3 months ago when I saw that little blurb changed my whole trading career. Just a stupid little comment, just something. I get that all the time. It kind of was true for me a little bit too, with the Jimmy Rogers quote that I'm sure you've heard me talk about. So there's lots of little things here, and hopefully if I can change a couple of you for the better or help you discover an issue, you know, it's all worth it. So let's run through what I have to say here. Question. Who would be more nervous, a pitcher about to pitch in a World Series game or an accountant presenting company books at the shareholders meeting? You don't need to answer that one. I'm going to make you answer some others. Let me answer this one because my point may be a little confusing. But my point is that the pitcher is always going to be more nervous, no matter how good he is. In this case, that doesn't really matter. Because pitching, any sport really, is a large degree an art. In other words, I don't care how good that pitcher is. If it's bottom of the ninth and full count, and he's got to throw a strike. Can he absolutely guarantee he's going to throw a strike? Right, exactly, Thomas. Yeah, keep the comments coming, by the way. I love the comments. But can he be guaranteed he's going to throw a strike? No matter how good he is, can he be guaranteed? Well, it's not even good enough in the major leagues to throw a strike. I mean, he's got to be able to throw a strike right on the outside corner wherever he wants. No matter how good he is, can any pitcher guarantee he's going to hit that 3 square inch spot he wants to hit on any particular pitch? Statistically, you can say, well, 80% of the time, blah, 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 blah. But when the pressure's on, yeah, that's true. Could get a bad call, right? Right. So the point being is that there's some art involved in pitching or in sports or anything like that. Compare that to an accountant going to a meeting. If it's just an accountant going to his routine company shareholders meeting, he has nothing to be nervous about because he is 100% accurate with 100% certainty. He's balancing numbers. It's totally objective, right? At least for this part of the slide that I'm talking about. It depends on how much the accountant cooks with. Yeah, well, we can get that, John. That's what I'm saying. For just a routine shareholders meeting, the point is he doesn't have to be nervous. In other words, here's our assets, our liabilities, here's the revenue. It's all just numbers. It all balances. It all adds up. There's nothing for him to be nervous about. Any question coming to him is going to be a number that's going to be in front of him. It's going to be black and white. There's nothing to discuss, right? However, so the theme here on this slide is simply that confidence is key, but it's harder to be confident in subjective acts, right? If the success of your outcome depends on probabilities, it's hard to have confidence because you can never be sure that, that's going to be one of the times it goes well. If you take that same accountant though, and you take 2 accountants and you say, here's an accountant that's presenting company books he's done for years like the last guy did, nothing to be worried about. Well, how about an accountant presenting company books under new rules that he didn't fully understand? In other words, he's meeting with the board of directors or whatever, and he's not even sure he got it right because now it's not just the simple black and white objective accounting, and all of a sudden wait a minute, there's 3 different ways this could have been done, and I'm not really sure, I didn't study up, I'm not really sure which is the best way to have done it. Now he's nervous because he's not really sure. So the concept here is simply that confidence is key. The better you know something, the more confident you are. So these 2 things obviously apply directly to trading. Number one of the keys I'm going to talk about today, the last slide is going to be, here's 6 things to do if psychology is an issue to you. You want to get to that slide? Let me ask a question here. Wait till I give you the 1, 2, and 3. Give me a 1 if you feel psychology is an issue and you don't know how to deal with it. Give me a 2 if psychology is an issue and you're dealing with it. Give me a 3 if psychology was an issue and you feel you're beyond it, and give me a 4 if you think psychology is goofy. So 1, you're having a hard time dealing with it. 2, you are dealing with it. 3, you dealt with it. And 4, psychology is stupid to talk about. All right. Keep them coming if you want. So we're going to get to a slide that says, here's 6 things I think that'll be the best that you can, and maybe also a little negative asterisk after one of those. But the first thing that we're going to get into on that is simply at confidence. Confidence is key to defeating psychology. Confidence is critical, and you have to know what you're doing. That's just the first step, and to shortcut that is going to be a problem. But the second thing I want to point out is in trading or in baseball or in golf or in anything that is somewhat subjective, there is a limit to how much confidence you will ever have. Maybe that's not phrased right, because maybe you can always have confidence in the stats, confidence in the percentages. But you have to understand that in those subjects, you're never going to be right all the time. And that's what people have a hard time with, is not being right all the time. But let me correct what I said. That doesn't mean you can't have confidence. In other words, you can still have complete confidence being a pitcher, because you know you can throw strikes 90% of the time when you want to. You know you can always have confidence as a trader because you know at the end of the week you're going to make money. At the end of whatever period of time you're going to make money, even if you have a dry spell, a few off trades, whatever it is. So it's that confidence in knowing you're going to pull through in the end, but not confidence that every single trade is going to be right, right? So who cares about all this? Isn't trading mostly objective? Isn't trading objective? I mean, it's prices, bars, green, red. I saw a commercial. It's back from 20 years ago. The commercial's back. If you can tell green from red, you can make money trading. If you guys want the link to that website, I'll give it to you. You know, that's all you have to do is you can tell green from red, you can make money trading. That's what they say. And that commercial was around 20 years ago. So here's what I'd like you guys to really participate. I allude to this in the seminars and also on that Friday that some of you came to, the Friday intro class that everybody's invited to. And I actually did some slides up here to actually do this. So I would love for you guys to participate. I'm going to ask you, go through a series of bars here, and I'm going to ask you which is the most bullish. Okay. Now, I know I'm not asking you to take a trade. I know it depends where they occur. I know it depends on all the time frames, blah, 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 blah. Just forget everything else in the world. I'm asking you just one thing. Here's two bars. If you had to bet your life on which is the most bullish bar, which one would you take? Okay, so here we go. You ready? Everybody ready? No, 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 no. Which candle is more bullish? See, that's a picture of a bull there in case you weren't sure which way we're going here. One or two? Everybody, I know this is probably the simplest slide, but just for fun, 100% agreement is number one, right? There's not a person on planet Earth, even if I walked out and picked somebody in a diner that didn't even know what a chart was, they'd pick number one just because green is better than red. Okay, so that's a fairly easy one, and you guys got that right. Congratulations. Piece of cake, it even says there. The bull went to the left side of the screen. I agree with you. Number one is the most bullish, okay? So let's switch the chart up totally here. Which one is more bullish now? Number one or number two? Number one is what we call a topping tail bar, in case you want the fancy terminology here. It happens to have, it looks like a penny. Let's say that bar is, $1 tall. It looks like it has maybe a couple cents worth of green in it. Number two is a bottoming tail bar. Now, you guys already have the answer. Two. Two. Everybody's two, 100% twos. Nothing to talk about, nothing to discuss. I agree with you. Number two. All right, we're doing good here. So trading so far seems very objective, right? Bullish, bearish, there's nothing to even talk about here, right? Let's do that. Did you see what happened there? Were you watching the slide? Boom. So we're taking the topping tail bar and we're just making it a little less toppy-taily. And we're taking the bottoming tail bar and making it a little more bottoming-taily. One or two. And I have predicted your answers because you'll see the slides are made up in a way that I can't really change it here. So number two, that's what I thought you guys would all say, number two. Number two, still the bullish bar. I think we're pretty clear on that one. You guys are doing fantastic, unbelievable. You know what's coming next, right? Here it is. There's the next one. One or two. We just increase that red a little bit and increase the green a little bit. Okay, still all twos across the board. And you know what? I got to agree with you. Still think that is the most bullish bar there. Okay, watch the slides here. Here we go. Boom. One or two. And as we get more and more down here, you got to pick one. You can't give me a little bit of each, and don't give me these wishy-washy, and don't give me decimals. One or two. One or two. I wasn't looking at the screen. Are you guys typing or are those old twos? What do you got? One or two? Two? You haven't been typing yet. It's time to start typing right now. Two. This is slide number 12. I have to agree with you. Number two is still the most bullish. All right. How about slide 13 here? Which is the most bullish now? One or two? One or two? We have some ones. We have some twos. Ones, twos. Hey, wait, guys, what happened? This is supposed to be simple, objective trading. I'm showing you two simple bars. You're split down the middle, right? You're split right down the middle here, one and two. And look at what I put on the slide. You ready for this? I knew that would be the chart that would split you guys. There you are, right down the middle. One and two. Hard to say. But isn't this supposed to be objective? How about the next slide? Well, give me new ratings here. Give me new ratings for this slide here. Go ahead and go. Obviously, if you were a 1 before, you're certainly a 1 now. The question is everybody 1 or are there still some 2s hanging on? So somewhere there we switch, right? So we just nailed it right there, right? If you go back 2 slides, everyone's bullish, right? Go forward 2 slides, everyone's bearish, and in the middle, you're split right down the middle, correct? That worked out so perfectly, I couldn't have asked for that anybody. You would think I'm almost faking this and had a fake audience here. Does that hit home with you a little bit? Does that hit home with you? And it has nothing to do with anybody's skill level here in the room. I don't know the answer to that one question either, right? I could pull together anybody you want. Get the Hall of Fame 50 best traders that ever lived on planet Earth, and you know what? There'd be a point in time where I could split them right down the middle. 1 is more bullish, 2 is more bullish, who knows, right? It's a subjective view, and we all can't even agree on that necessarily. So there's, like I said, this is a little eclectic combination of things, but I want you to remember that there is no certainties in trading. And naturally, this is one little bar. What do we do to make our decision? Well, we don't just look at the bar. We look at the surrounding bars. We look at the time frame. We look at multiple time frames. We look at the market. We look at the timing. We look at the math. We look at the probabilities. Look at all these different things to make our decision in terms of what we want to do. And if we're pretty good at it, we're right a lot more than we're wrong. Or at least we make money more than we lose money. All right. And then, of course, when we get back to the original slide, it's 100% certainty. We know that number one is more bullish. A quote from one of the classes here: the ability to make a 4-week salary in a couple of hours brings about emotions of fear and greed to the traders doing things they never believed they would do. I get a little comments. There was just some stupid comment I put in program a long time ago. And it gets a lot of comments. People come back to say, just reading that just made me realize, what it is that does it to me, that makes me get all messed up. So many times someone will get a hold of me because they're doing terrible and want to know what to do. Now this is somebody that, just somebody new. I don't really know. I'll get emails sometimes. They'll come to a presentation like this. They're not necessarily a subscriber, member, or anything. They hear about me, they hear me, they like what I have to say, and they'll send me, sometimes it's just an email that says, well, I've been trading for 2 years and I read this and did that, and I'm down this much money and I don't know what to do and blah, blah, blah. And they're asking, like, what should I do? Well, how can I possibly answer that? I mean, how can I possibly, my first thing would generally be, well, just stop trading because you don't know what you're doing. But sometimes they send trades. Now, it's hard to tell from a few trades, but a lot of times I can tell that they kind of know what they're doing. In other words, they know what they're doing good enough that they should be making a little money, breaking even, making some money, right? But they're getting slaughtered. Question for you guys. If the charts they're picking are good enough to be making at least some money, maybe they could benefit from a little chart improvement, I don't know, but their trading results are as if they were clueless. Why is that? And maybe some of you can relate to that. Why is it that somebody could read a chart good enough to make money, in my view, but yet get absolutely slaughtered? I don't mean just not doing okay. I mean getting slaughtered, right? I mean, in a lot of other arenas, if you're an okay pitcher, you're an okay pitcher. If you're an okay at whatever, you're okay. If you're an okay engineer, you're okay. Why is it in trading that you could be okay at the basic component of trading, understanding technical analysis, and yet get slaughtered? Right. Yeah, a whole lot of things, because it's a psychological part of it. It's that you can have good trades and now you don't make money from them because you're so psychologically damaged. And then you could have bad trades that you get killed on. And you could have, don't forget, there's winning and losing trades, there's good and bad trades. They're not necessarily synonymous. You have good trades that are losing trades, and you can have bad trades that are winning trades. So you get somebody who maybe has a good trade, but he's just been so beaten up and torn apart, and he sees a little bit of money and he just takes it, just to relieve some of the losses that he's had. But then when he has his losses, he's saying, I can't give that back. He tries to hang on to it, and he comes up with a bigger loss than what he just made. So you really have to magnify, perfect, exaggerate all the good in what you do through good management and not goofing up, making mistakes psychologically. Now, what's interesting, the reason I put this comment in here, or this slide in here, is because what people always do to fix their problem, what they'll always say to me is that they're off learning something new, whatever it is. It's a new course, a new program, a new style, a new time. Some people make the genius comment, I'm going to switch to options, or they switch to Forex instead of stocks, or futures instead of stocks, or whatever it is. And is that going to help anybody? Anybody in this situation, is it going to matter if they switch from stocks to Forex? Or if they use a different time frame chart? Or if they use different moving averages? Is any of that stuff going to help these people? Yeah, no, not at all. Not even close. Because they're not understanding what they've learned. They're not perfecting what they've learned. And they've already, even though I wouldn't say these people are great traders technically, they could be okay traders. And they're just terrible because it's like this kind of slippery slope. I mean, you have to hit this level, this plateau, where you get confidence, where you understand, and the confidence gives you the ability to properly handle losses. It gives you the ability to really stretch some of your gains. And when you don't have confidence, it's the opposite. It's like you want to quickly scalp, just kind of take any small winners as quick as you can, and then you're stubborn about hanging on to the losers. Is paper trading a good medicine for psych? Tell you what, John, would you ask me that exact question on the last slide or two in about 20 minutes? I absolutely want to answer your question. I just think if I proceed like I am, that'll fit in really nicely rather than jumping to it right now, okay? Another quick little eclectic side. There's only two times when you experience psychological issues in trading. When you make money and when you lose money. And yes, it is supposed to be a little bit tongue-in-cheek because that covers almost every trade. And in case you're thinking, what about when you break even? Well, it may also happen when you break even. Why is that? Well, what I mean is that winning, and some of you have probably experienced this. When you're winning, it can make you complacent. It can make you feel invincible. It can make you feel greedy. It can make you trade more. It can make you forget what made you good, right? And everybody's been through this, right? I mean, anybody's been trading at all. If you're doing great or if you're struggling, wherever you are, you've had your ups and downs. I have almost no question about it. Even fairly poor traders have good streaks. And what's funny is sometimes a good streak can make you bad because psychology comes in both directions. You can start doing bad after some good trades because you drop all the standards that got you there, right? You start thinking you can just pick up any chart and do what you want to do, and then all of a sudden, boom, you start giving money back because you're not using the same standards that you used to get you where you are. So all of these different things come in sometimes. You've all probably been there, right? You forgot what made you good in the first place, and then you start trading too much. Trading too much is a real demon to me. Yeah. Yeah, it can be, right. You can justify what you're doing because you say you're playing with the house's money. I use that as a good comment, though, sometimes, Thomas. I mean, sometimes I like saying that to go for the gusto when you got the house's money because it's easier to do psychologically. But yeah, I know what you mean. These are all things that we use as excuses that can make psychological problems enter when you're doing well. And of course, when you're losing, I think most people can relate to this even better. You're aggravated, you feel you've been cheated, and ironically, it also makes you trade more. In other words, psychological issues in both directions make you trade more, either because you just feel invincible, or in this case, you don't feel invincible, but you feel you have to erase that red on the screen, right? It's the old, the first step to getting out of a hole is to stop digging. And that's what most people do. They keep digging, and they feel this tremendous desire to trade more, to trade faster, to double down on the amount. And this is where people get into a really, really bad problem. Because if you're bad and you're losing, you get worse, and then you double the psychological problems. And if you never had the skill to start with, it would be somewhat of a miracle, actually, to reverse what's going on. It's just not going to happen, is the bottom line. From here, I'm going right to the checklist of what to do. Now, in all of this time, I think psychological issues are a big deal to deal with, and they're parts of a lot of other presentations. But there was one other presentation I did a couple years ago, and I have it on the slide here coming up, that if you like the topic, I did something similar. I think it's called Let's Talk Psycho. And actually is amazing. I didn't want to look at it until I was done with this one because I forget them. And it's all different points, sort of. It's different things to discuss. So it's a very, very big topic to completely go over. So let's switch gears here halfway through and talk about how you deal with this. How do you deal with it? What is the checklist? Overcome psychological issues. Well, here is number one, top of the list. You cannot even begin to wrap your head around psychological issues until you become excellent at whatever skill it is that you want to do, right? If you want to mention this in another presentation, if you want to be a great public speaker, you have to know what you're talking about perfectly, right? Up, down, left, right, be the absolute expert. I feel great talking to any size group of people as long as I'm an expert at what I'm talking about. I'll talk about trading, investing anywhere in the world, any time, any topic. I wouldn't be fearful at all. But put me in there talking about something I'm not 100% knowledgeable about, I'm going to be scared. So the very first step is that you have to gain superior technical knowledge. I don't know how else to phrase that. It's not enough to kind of know the charts. Most people learn, I don't want this to sound like an ad, but it's just simply the truth. And you guys have to handle it however you want to. Most people learn just enough that if they get really good at what they learn, they might be able to maybe kind of sort of break even. Can some of you relate to that? In other words, some of you taken courses or online stuff or videos, and you'd have to know it perfectly, and you're still going to lose money probably, right? So there's an awful lot of stuff out there that allows you to, it's not wrong information, it's just woefully incomplete. It's just not even close to what you need to make money in the market. And recently I did a presentation talking about odds and probabilities and likening it to blackjack and all that stuff, and how a casino owner, how if they were sloppy about how they did their security and hiring people, that they wouldn't make any money. We don't have those huge odds. And you have to take advantage of everything you can, every technical aspect, and understand charts as good as you possibly can. So that is simply step one. You can't proceed in any craft to master it, to expect to perfect it until you understand the basics of what you're doing. That's all there is to it, and to understand it in a very great way. So however you want to do it, you have to really learn technical analysis charts properly. There is no other way for you to make money in the market. I mean, doing it yourself. You can follow somebody else, but I mean, for you to learn it, it's technical analysis. There's no other choice. There is nothing else to talk about or to do or to look at. It's a great way to do it. And as much as I'm saying you have to master it, it's not hard to master. It's really not hard. It doesn't take great skill, technical expertise. It doesn't take great intellect in any way, shape, or form. It takes more perseverance than anything else. Number two, you must gain confidence. Now, gaining confidence is a two-part process. Whoops. Back to number one. I had a little blurb under that. Think of how your confidence changes when you know your subject matter. Okay, I said that. You must gain confidence. This is a two-part process. Number one, following a plan. You can't get it right if you don't know what right even is. I want you to really think about that. All the talk, I know when you say trading plans to traders, they almost instantly ice up, turn away, clam up, because it's not a fun thing to do. You just want to go trade and make money and blah, 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 blah. But if there was one line I could say to somebody, if there was just one line that I could say, if I just had 5 seconds with a trader to convince them to incorporate a trading plan, here's the one line. You can't get it right if you don't even know what right is. Does that hit home with any of you? When you go out to trade, whether it's long-term, day trading, it doesn't matter. If you get a couple trades and they made money, you get a couple trades, they lose money. Which were the right trades? How do you even know? I mean, you have to have your standards of what you want to do so that you can constantly monitor and improve and check. And especially as a newer trader, there's just no way to know. So you have 3 good trades on Monday, you make some money. You have 3 bad trades on Tuesday, they lose money. I'm sorry, we don't know if they're good or bad. You made money Monday, you lost money Tuesday. How do you duplicate the success of money or eliminate any possible mistakes on Tuesday unless you know what you did compared to what you're supposed to do, right? Yeah, good. I'm glad if you're past that point. That's great, okay? Because if you really have that plan that you've written and that you use and you check and follow up on, you can only get better. Now, maybe the skill isn't there, to get to a level you want to be at, but it's a floor, it's a floor underneath you. And number two, to gaining confidence, is you have to start off on small money so you can follow your plan. See, this is where a lot of people goof up, is that the most common thing I see is that somebody will write a trading plan. They'll put it in the drawer, leave it in the computer, unopened. They'll go and trade and lose money. And then they'll say, well, that plan's not working. But they're not following their plan at all. They're just doing whatever they want to do under the illusion that they wrote this plan. But if they would check, because I've seen people send them, and I say, well, send me your trading plan, and then they send me something that they haven't looked at in a month. And their trades have nothing to do with their trading plan, but yet they're saying that that plan is no good. They need to come up with some new concepts, right? Make sense? So the reason people don't follow a plan is because they start trading too much money too quick. And rather than focus on following the plan and perfecting it, and then increasing the money, they immediately start managing the money, and they immediately start doing things wrong and different from what they're supposed to do because they can't stand the thought of losing $200 on this trade again, or whatever it is. So again, if you want the one-word answer or the one bullet point answer to overcoming psychological issues, I'd say it's to gain confidence through a well-formed plan and starting off small enough that you can follow that plan. I can't say any simpler than that. One thing I want you to give me credit for, and when I bring you to a presentation, I don't leave you hanging. I mean, here's the answers in black and white. And I'm not saying they're always easy to follow the answers. I get that, but here we are, right? If you bet big, you immediately right. You're not just at a disadvantage, David. I mean, you have. I'm going to rephrase that for you if you don't mind. You've eliminated any chance for success. How's that? You have to build into the right to trade higher share size. That's all there is to it. You can't do it as a new person. You just can't. It's not possible. Number 3, checklist to overcome building psychological issues. You must build. You must build on success and eliminate mistakes. The people, I get these great emails sometimes from people that I've cracked through. I've done it. I've been afraid to write you for a while because I'm afraid I'm going to jinx myself, but I'm beyond that point. I've made it. I've got it. And you know what it always is? It always comes back to, I got serious about that trading plan or I got serious about just checking what I do every single day. It's amazing. And I know most of you here, you're probably a very high percentage of people, to the extent that maybe you are trading or investing actively right now, that do go back and look at these things because you're here listening to a talk about psychology. You obviously care. So I have to think most of you do, but the average trader out there who's struggling doesn't even bother to go back and look at what he or she did that day. No sympathy for somebody like that. They just don't care. I actually made the comment to somebody one time that how do you expect me to sit here and talk to you and act like I care about your trading when you don't care about your trading? You don't care at all. You're coming to me for help, but you haven't even taken step 1 to help yourself. Make sense? Can we all agree with that? And if you do agree with that, then ask yourself this question and don't answer on the screen. But do you really do this? Is that where you're at? Many of you, I understand you're dipping your toe in. You're maybe going to start getting serious this next year, whatever it is. That's where a lot of people are. But if you're out there trading money, do you have superior technical knowledge? Have you done this to gain confidence and you're building on your confidence? Do you every single set of trades go back and try and eliminate mistakes? You do this by constant trade review. What if you eliminated just 1 mistake a week? One of the things I think I typically don't do this in the free events, but when we talk in detail about eliminating mistakes, you go through a process and you go through your trades, and then what you do is you categorize the mistakes you made, and then you just make a vow that every week as a day trader, every month as a long-term trader, that you're going to eliminate your biggest demon, whatever it is. And you focus on only doing that one thing. You don't try and eliminate all your mistakes, because if you emphasize everything, you've emphasized nothing. And just think about where you would be if you're day trading. If you just seriously made all your effort to have eliminated 1 mistake every week for the last 2 months, you could only be a lot better. Number 4, I put this as a top thing. I think I may not have listed it a couple years ago as a top thing, but the more I talk about and think about it, the more I think this is one of the keys to overcoming psychological issues. To accept a McDonald's day. Now, what does that mean? I feel that, and you can relate this to long-term trading too, it works out the same, but this is take for a day trader. I feel the typical day trader, a good week, is that you have probably a really good day and a second pretty good day. Maybe 2 pretty good days and 1 great day, something like that. And then you have a losing day. And then you have what I call a McDonald's day. And maybe your week consists of a losing day and 2 McDonald's days and 2 pretty good days. I think that the key to most traders is the McDonald's days, because everybody seems to be able to pull together winning days. And while initially new traders may suffer poorly from developing some really bad losing days, people kind of learn to overcome that, because big losing days are a punch in the face. I mean, you can't hide a bad losing day, and you can't forget about it. You can't not think about it. And people tend to just self-correct bad losing days. They stop. But I think the culprits can be what I call the McDonald's days. This is not accepting the fact that you had a small winning, a small losing day, and just be able to walk away and say, you know what, that's okay. I did the right things today. It didn't come together properly. Lost a little money today, but you know what? All that means is that it's double the odds that I'm going to make a lot of money tomorrow. And to be able to have that attitude, because if you keep chipping away at it and refusing to accept a McDonald's day loss, it can turn into a bigger loss. And these are often hidden. because they don't necessarily mean that they're big losing days, but you take a small day, just a nothing day, and you turn it into a losing day, and all of a sudden your week gets hard to pull out. So I think one of the issues is to be able to have the confidence to be able to just say, hey, I'm walking away today, I'm fine. I don't have to go back and take that next trade. I don't have to try and, fix something or do anything. I did the highest odds things I knew to do. For whatever reason, it just didn't pull out today, didn't pull through. I'll come back tomorrow, I'll come back next week, whatever it is. If you did everything right, you can still lose. Accept it and move on. All psychological issues are between the ears. This is something like I say all the time, and I realize not just in saying it, but even for myself, it's not always easy. But literally, psychological issues can be changed by just flipping a switch in your brain, right? Do you ever think about that? I mean, this is just between your ears, whatever it is, whether it's losing weight, exercising, trading properly. If you know what your mistakes are, it's just a matter of flipping that switch and saying, no, I'm done. Stop. Remember the story I tell you, you've heard me say maybe if you listen to me enough, the book, The New Market Wizards. He interviews 20 successful traders, 25 successful traders, and figures out what the common thing they have is. And one of the side parts of the story is that every one of those successful traders lost initially, lost fairly big, every trader lost at least half their account, and some lost multiple accounts before they got so mad that they just stopped. And it was like just putting on the brakes and flipping a switch, and they stopped and they were good. Just boom, just like that, because they just decided they had enough. And the reason the Nike swoosh is there is because that's their old motto. Just do it. Just do it. And unfortunately, here's the thing. The whole psychological talk, it may be something none of you can ever do, because it comes down to, I can give you all these tips, advice, and words and comments and pats on the back and yell at you and whatever it is, but it comes down to it that you have to just do it. And if you don't do it, there's no hope, right? Isn't that true? It comes down to you just have to do it. Yeah, Jeff, that's a good way to phrase it too. Yeah. I always like the flipping a switch in your brain thing, Just put yourself in an out-of-body experience and just pretend you're controlling yourself from the outside and say, enough, here's what you do today, period. And number 6, you build on success and eliminate mistakes. Now, there's a couple more slides here, but before I get to those last 2 slides, so your question, I know your question, but who asked it so I know who I was talking to? John, first name with a G. Yeah, there you are. So I discussed this actually on the Friday intro class. Were you at the last one, John? It was just a week ago Friday. Okay. So you're invited to those, and I spend 4.5 hours, and toward the end we talk about, proper prep and that kind of thing. And paper trading to me is absolutely required. There's a lot of debate about paper trading. So whenever I do the discussion, I always say, look, here's your answer. You need go no further than me. This is your answer. Don't listen to anything else. Number 1, yes, paper trading is absolutely mandatory. Okay, you need to just get used to your platform, develop your trading plan, find out what you're doing, practice, go out there and do a whole bunch of different trades in different time frames, different things, just to have fun, get to know what you like, etc. But there's a limited purpose to paper trading, and once you do that, you need to then switch over to small risk. And on one hand, you have to paper trade. On the other hand, if you're doing this, kind of full time and you want to get into it, if you're like learning to day trade full time, I would not suggest paper trade more than 2 to 3 weeks. In other words, don't do it too long, because there is a very limited benefit. Once you get past the benefits of finding out what you want to do, starting your trading plan, getting used to the platform, all those good things, the next thing is that you have to start understanding how to take the trades and how to do it psychologically. And for that, you need to put some risk on the table. What I recommend doing, and this is the important step, John, it's not the paper trading phase, it's the next step, going to risk $5. Literally $5. But in your real account is a permanent record, because when you're paper trading, you cheat, you start over, you do whatever you want to do, you say, oh, I wouldn't have actually let that stop run that far. But what's funny is when you're trading $5 risk, it's real. It's in the account. You can't change it. And at the end of the week, you got 8 out of 10 trades wrong. You can't hide it. And that's the punch in the face. But you can work through it because you only lost $30 at the end of the week or whatever it is. That's all you lost. Nobody cares. So and for this, again, I'll refer you to a video that's on the Hall of Fame thing. It's called From Chart Reader to Trader Investor, that talks about the two biggest mistakes people make when they start off and then when they get good. Okay? I think that answered your question. I read it quickly, but I think it basically was, is paper trading a mandatory part of the psychological process? And it is, because that's how you get the confidence, right? That's how you get the confidence, is to start off small and to trade properly. And then when everything's going great, and whatever standard you want. I made 20 bucks this week. I got 3 trades right in a row. I don't care what it is. That's up to you. Move it up to 10 bucks, 20, and just keep going until all of a sudden you go, oh, wait a minute. I took a stop and that really hurt. That bothered me. There was too much money on the line. Maybe I better stay here at 50 for a while, or 100, or whatever it is. A couple more slides here. We're done right on schedule. A couple of final comments about the checklist. Someone once asked me when it was time to quit. I actually got that question. When should, I'm struggling. When should I quit trying to learn how to trade? And I had never been asked that question before, and I gave an immediate answer. I don't know why, and I never forgot it. I said, it's time to quit when you can't get yourself to do what you need to do. Go back one slide, sure. When you can't get yourself to do what it is you need to do. Now, obviously, there may be other reasons you need to quit. You're out of time, out of money, whatever it is. But that's the thing to me, is when you keep trying to fix your mistakes and you keep doing them and you just keep doing it and doing it, you're just somebody that's never going to change. It's time to quit. And I also want to remind you about something else, which leads to our final slide of the night. And again, whenever I say this, I always feel almost bad, and I almost have to apologize for it. But remember, there's nothing about trading that requires the intelligence beyond that of a 5th grader. Traders, successful or not successful, wherever you are, is that true? I say that all the time, but is that true, yes or no? That trading does not require the raw intelligence above a 5th grader. We're not doing calculus, and we're not doing advanced quantum dynamics. We're just adding and subtracting. I'm not trying to say that makes it easy, but do you agree with that? That I mean, from an intelligence point of view, right? Because I think that's an important thing to bring out to you. You know why? Because the lack of intelligence is not an excuse. Now, the lack of learning what you need to learn the right things, yes, but that's not what intelligence. Intelligence is just the raw ability of your brain, and there's not. This is, in most sense, this is more artsy than it is intelligence, by far, I think, right? Well, the math required, I'm pretty sure, is 5th grade. I'll give you a 6th if you want, especially if you were held back a year. But and that reminds me, and then when I wrote that, and I said that trading requires intelligence, and the lack of intelligence is not an excuse. It reminded me of a favorite quote for me. I have a favorite trading quote that I think all of you know. But this other quote is a second favorite trading quote, and maybe it's kind of a favorite life quote. And I for some reason, the wording of it bothers me a little bit, but I think it's worth saying a little bit. This is a quote, and if anybody knows who either said this quote or made it famous, feel free to type it on the screen. Nothing in this world can take the place of persistence. Talent won't. Nothing is more common than unsuccessful men without talent. Genius won't. Unrewarded genius is practically a cliche. Education won't. The world is full of educated fools. Persistence and determination alone are all powerful. Actually, the quote I learned was different. I just pasted this in here without really reading it. This is a little different. It's just the wording's a little different. Genius will not. Unrewarded genius is almost a proverb, is what it was. And education will not. The world is full of uneducated derelicts, is what the original quote was. You're correct, Tim. Calvin Coolidge originally said this. Does anybody know who made this famous, though? Well, it originally, Calvin Coolidge first said this, Bruce. Yes, that's Tim's right up there. Calvin Coolidge, that's his quote. But it was made famous, or at least very highly promoted, by Ray Kroc. This is Ray Kroc's motto. So I don't know if this is totally applicable to trading or not, but my point of it is simply that it is in that category where it's not great intelligence. It's simply the psychological battle, and that really comes down to persistence. The ability to sit there and to correct what is wrong, because that's at some point that's all there is to success. Now, obviously, this whole talk tonight was about psychology. I mentioned, but of course it does not incorporate the fact that what we're doing is trading. We have to learn how to trade, and we have to do that by understanding charts. Thanks, Marinus. You haven't heard me ever refer to that? I haven't in a while, but I used to bring it up more often. If you like the talks tonight, there's another God, it was 6 of 11. That was 2 years ago. I did a talk called Let's Talk Cycle. And actually, it is a little bit uniquely different than this one. There's really no duplicate in it, which I thought is kind of interesting. And remember, to get to something that old, when you go to the free stuff page, you have to go to the archive section, because the typical only last 12 or 15 videos are there, and then you go to the archive page. All right. Any questions, anybody? I'd like to remind you all the time, for those of you who want to day trade, don't have the $25,000 for the account because it's tied up somewhere else. You can email me for a way that you can get 10-to-1 leverage with your money. Just a reminder, and a little reminder about the free stuff page. I see some people typing. Let me see what you got. As always, my email is right there, and if you're new, feel free to email me if you want to have any questions. Even if you want to get together and chat, I don't mind. In the afternoon, I'm usually pretty bored. I usually am done trading 11 o'clock. I guess that's, instead of focusing on a huge problem, focus on a little tiny spark, so to speak. Yeah, that's what you got to do. That might be very applicable to traders too, Glenn. That might be very applicable. You know, rather than trying to say, gee, I have to follow this whole plan and rules, maybe every day, every week, you say, look, here's something. I'm not going to pull out the lighter. I'm not going to trade the opening 5 minutes. I'm not going to, buy anything that's already up 1% on the day, whatever it is, right? That's actually an excellent little addition there. Focus on just eliminating very simple. It's easier to stop doing one little thing than it is to try and stop doing an entire process. Right, I think we're done, folks. Have a great one, everybody. Take care.